So interest rates are rising fast. What does that mean for you as a buyer or seller? Bill Mayer, your favorite Montana realtor. Let's dive right in. So it's no secret that interest rates have been climbing. We were at 3% not too long ago, and we're approaching 6% at this point. So how does that translate into this market, and how does it affect buyers and sellers? So a couple of really interesting articles came out this week. The first one was from CNBC, who reports that these increasing interest rates have cost the average buyer $165,000 in purchasing power just in the last year. And as rates continue to go up, as the Fed promises, buying power will continue to decrease. Here's a great visual that was put out by Redfin just a couple of days ago. And on the graph, what you'll see is on the horizontal axis, it shows interest rates anywhere from 1% to 10%. And the vertical axis shows the purchasing power in dollars of someone who has roughly $2,500 a month as a mortgage budget, basically being approved for a mortgage as high as $2,500. And as you can see, at a 3%, which is where we were not too long ago, that gave a person a purchasing power of almost just over $500,000. Now, fast forward to today, where we're approaching that 6% interest rate. That takes the same person's budget of $2,500 a month and decreases that purchasing price to a home just under $400,000. So a huge, huge difference as those interest rates continue to climb. So buyers, this means several things. Number one, your purchasing power is going to decline. That's just a fact that as interest rates go up, you're going to qualify for less. There's going to be a decrease in the number of homes that meet your parameters or your goals. You may need to change your parameters or your goals, such as decreasing the number of bedrooms and bathrooms that you need, decreasing maybe the lot size, or even moving a little bit further away from town to be able to afford something that was in your budget. Sellers, pay attention. This is huge. I don't have a crystal ball, and there's people on both sides of the fence, some saying we're in for a market turn, others saying that we're not. Are we in for a buyer's market? That's a possibility. Are we at the top of the market right now? That's a possibility. So sellers, it's important that you decide your situation. If you feel we're at the top of a market, it's a great time to sell a home. Obviously, with the appreciation we've seen over the last number of years, even though some of the data suggests that those prices are going to continue to increase, in some areas, especially here in Montana, as much as 8% over the next 12 months, even though we're going to see some dwindling supply of buyers and their ability to qualify. Back to buyers. Buyers, keep in mind that there are some ways to lower what's called your effective interest rate, or the impact that that interest rate has on the amount of money you pay over the life of the loan. Two major options pop up that you need to be aware of. The first, and again, this is talking if you get into a mortgage at this point at a 6% interest rate as opposed to, again, 3% where we were. Also knowing that we were at a much higher interest rate 8, 10, 12 years ago. Several things you can do. You can refinance in the future when those rates go back down. One of the greatest impacts you can make to lower that effective interest rate is just by making extra principal payments every month. As an example, if you make one extra payment every year on your mortgage, you're going to decrease your mortgage somewhere between 4 and 6 years, depending on the mortgage amount, and you'll save tens of thousands of dollars, which will easily offset a higher interest rate. So just some food for thought. If you found some value in this video, please just crush that like button. Make sure you subscribe, and please leave some comments below. Let me know your thoughts on the whole market and the interest rate. And if there's other video content you'd like to see, please let us know. Life is short. Love where you live.